Hi, it's Jeff Nunley from Peak Mortgage. Hey, I'd like to take a minute and talk about a program that during the financial crisis represented as much as 40% of all the loans being done in the United States. And since then, just this year has regained its popularity because of a substantial drop in the mortgage insurance premiums around the loan. A full half a point lower in effective interest rate in terms of the monthly payments, etc., have made FHA a very attractive loan option again. Now, what is FHA? FHA is the Federal Housing Authority. It is part of the Department of Human and Economic Housing and Urban Development. Sorry. FHA is a low down payment program designed to give moderate income borrowers the ability to buy a home. Now, you don't have to be a first-time home buyer, nor do you have to have moderate income. That's just the purpose of FHA. FHA lets you put as little as 3.5% down payment down on a home and allows you great flexibility in both credit and debt to income. There's some other nice features too. So in terms of the down payment also, one of the neat things about FHA is that because it is a government program, not a government sponsored program, but really a true government program, it works in conjunction with most of the available grant programs. So a lot of first-time home buyer programs, mortgage credits, mortgage credit certificates, the NHF grant program, the First Down program, many state, county, and city agencies work in conjunction with FHA to help people who maybe have lower income get into a house with little or no down payment. We offer some of those grant programs here at Peak Mortgage, and they've been really a boon to those people that need that product. So that's a great opportunity with FHA. Also, with that down payment, it's extremely flexible how you come up with it. You're allowed, for example, to get a gift from a relative. You can borrow that money. It's a secured borrowing. You can't do it on a credit card. However, you could do it on a car loan or on a secured line of credit against some item. You can sell assets, and you can get the money out of your retirement account. So it's very flexible how FHA allows you to come up with the money for a down payment. And that's really important these days because so many people are trying to save more money for a down payment, which is virtually impossible in this environment for the average person. If you haven't already saved a lot of money and you haven't been really good at saving money, imagine now you're trying to save money to buy your dream home or your first home, and prices are going up and rates are starting to go up. That's an exponential problem to surmount. That means that if you could qualify to buy a $200,000 house today and you needed a down payment, a year from now, the house you wanted to buy for 200 is now going to be worth 210, maybe even 220,000, which means the house you don't want to live in, the $175,000 house, is all you'll be able to afford at 200 next year. So it's very hard to save money into this environment. So a down payment program with flexible down payment options, low down payment program, can really make a difference for you to move forward and get the house you really want today instead of waiting to someday in the future when you think you have enough money to qualify. Now, in addition to that, FHA is very flexible on credit. One of the things that we've been dealing with for the last few years with conventional loans, and this is your Fannie Mae, your Freddie Mac, most bank loans that we think of as mortgages, is that they have what's called a loan level price adjuster. It means when I get a grid, my grid tells me based on your credit score and based on the loan to value you want to borrow, whether it's 3%, 5%, 10%, 20% down, etc., your rate is going to go up. So the less you put down and the lower your credit score, the higher your rate is going to be. Now, while there's some minor adjustments within FHA, they're not nearly as punitive. So you might find that today you could still look at getting an interest rate in the threes on an FHA loan with as low as a 640 credit score, but you might even be in the high five or high fours, very close to 5% on a comparable 5% down conventional, and you'd be over 5% on a 3% down conventional. So it's a real great opportunity to get a very good interest rate and not get beat up because of your credit score. FHA also writes down to lower credit scores than comparable conventional loans. See, FHA's guideline is mainly based on what your credit report looks like. They want to know that you actually have a credit report that's worthy of financing. So they're not so worried about credit score. As a matter of fact, when they were asked to establish a credit score, FHA said, fine, we'll make it 500, which is honestly absolutely ridiculous. Nobody with a 500 credit score is going to qualify for an FHA loan. It's just not going to happen. Why? Because the underlying credit is going to stink. It just is. Now, however, if you get your credit score up closer to 580, that's where we can really start talking. We write a 580 credit score. There are lenders out there that go as low as 550 and occasionally write those deals. But at 580 and above, you can begin to see some real traction and start seeing loans being done, albeit for a little bit higher rate than what the best FHA loans are, but not substantial. And you get the same mortgage insurance premium. Where on the conventional loans, the mortgage insurance you would pay for that same loan would also go up, and they start at 620. Now, your best rates really start at 640, and that's where most of the grant programs start, being able to help you with that down payment. But you got a lot of flexibility there. Another place that FHA offers tremendous flexibility is in the debt-to-income ratio. Now, what I mean by that is the amount of monthly payments you carry on debt. So we're not talking cell phones, we're not talking your current rent payment, but debt payments, credit cards, student loans that you're currently paying on, lines of credit, car payments, those sorts of debt. Those, with your new housing payment, can get as high as 50 or even maybe in the low 50s against your gross monthly income. Not your net, but your gross. Now, while we do not recommend you buy more house than you should, there are reasons to consider a flexible program like FHA. One of those would be if you had a spouse or a significant other who represented income into the house but couldn't take title. Maybe they'd had a prior divorce and their prior spouse just ran them through the ringer. Maybe they have tax problems. Maybe they have a recent bankruptcy or a prior foreclosure. They just simply can't take title today. With FHA, you might be able to buy the house on your own with a 50, 51, 52% debt-to-income ratio based on your own income, and that total household income that's coming in would offset that. And that would be maybe a situation where something like that would be appropriate. But tremendous flexibility in that debt-to-income ratio, and that can be huge when you're looking in a market like this, especially if you're a moderate income buyer. One other area that a lot of people don't talk about that's going to become increasingly important with FHA is that the FHA loans are assumable. Now, what I mean by that is somebody in the future, when rates are higher, might be interested in buying your loan as is. You may be paid on it for 5 years. You have a 3.75 rate. Rates are currently at 7%. God forbid, 7%, and your rate's nearly half the going rate. Somebody might be able to pay you your equity in cash and take over your substantially lower loan already 5 years in. So I think increasingly we're going to see that become an important part of marketing for housing as rates go up. So great features for FHA. I would encourage you 100% to look into these low down payment programs, whether it's FHA, the My Community program, the 3% down, Freddie Mac and Fannie Mae loans, USDA, any of these low down payment programs, so that you're not fighting against prices and rates going up at the same time, because that's a recipe for never getting the house you want. I appreciate your time. Again, my name is Jeff Nunley. I'm at Peak Mortgage. My contact information is readily available right there. Feel free to email me. Feel free to give me a call, carrier pigeon, however you'd like to get a hold of me. I'm more than happy to help. And we'll talk to you later. Thanks.